Yo, so what is going on, guys? It is another beautiful Tuesday night. We had a lot of market move that happened last week, so we're going to cover what happened last week, what we discussed last week, and how we were exactly right, by the way. We're going to mention that really quick in the beginning. So we called out a beautiful trade setup on Euro USD last week, right before the FOMC meeting happened, right? For simplicity, that is a meeting that happens, I think, 8 times a year, where the government pretty much gets together and hold on, I look blurry. But the government gets together and they pretty much discuss whether they think they're going to raise interest rates or not in order to battle inflation and in order to just stimulate the economy. So we had a breakdown about that last week, and we made our trade prediction based off of that, and it was a beautiful trade, right? So we won the trade. We're going to go over why we won the trade. That's not going to take too long, and then we're going to go into what we can expect for the remaining of this week. As always, it's only Tuesday, so there's a lot of opportunity left in the market for the rest of the week. So if at any point in this call you get confused, have a question, or something I'm saying isn't making the most sense, just do yourself a favor and do me a favor and just type your question in the chat, okay? I'm expecting some newer people on here as well, and some people had some questions that they wanted me to go over in regards to platforms. So I'm gonna, go over how to use TradingView slightly, just go over the basics of it, what it is, how it works. That's not gonna be too long, and then at the end of the call, I'm gonna go over brokers again. I get these questions a lot about what platform to use, what app to use, what broker to use. Do you use MetaTrader? Do you use TradeLocker? Do you use CTrader? What is TradingView? How do you connect your account to TradingView? And all this other mumbo jumbo, right? So we're gonna go over all that stuff. And like I said, if you guys have any confusions or comments, let me know in the chat and I'll break it down personally, okay? So since these calls are usually smaller, do yourself the favor and ask questions if you have them, okay? Again, I'm gonna say it, the only dumb question is the one that you don't ask, all right? So keep that in mind while we're going through the information. And yeah, if you guys have any questions, let me know. But we're gonna go ahead and get right into it. Let me make myself a little smaller over here. Okay. So what we're gonna do is that way I know where we're at while I go ahead and I pull this stuff off, or pull this up. Do me a favor and in the chat, just drop a number in the chat based off of your level of experience when it comes to trading, like where you really feel like you're at right now, where you think you're at, but like where you're really gonna say you're at. You know what I mean? Everyone says they're a good trader. Everybody says that they know what they're doing. But if the profits aren't really saying that, and the consistency isn't really saying that, then there's no need to boast ourselves up about it. You know what I mean? So put on a scale of like 1 to 10 where you feel your level of trading knowledge is, whether it's a 1, you're a complete beginner, 10 meaning you're profitable, you're trading on your own, and you're killing it in the market, right? So on a scale of 1 to 10, for the people that are on here, just drop in the chat what you think your level of trading currently is. That way I know how in depth to go and what points I should be a little bit more focused on throughout this call. You know what I mean? So if you're a 2, put you're a 2. If you're a 5, put you're a 5. If you're an 8, put that you're an 8. And if you're a 1, put that you're a 1. You know what I'm saying? So that way we know where we're at, okay? And we'll go from there. Right, so I'm going to give you guys a second to do that. We have Kamari, who says he's an 8, who has been killing it. You have been doing your own analysis lately, bro, and you've been doing really good. So I'm proud of that. Jamara says you're a 5. I would say that's pretty accurate. I'd say maybe you're a 6 or a 7. You know what I mean? We just got to get you a little bit more consistent, but we're good. I'm expecting some 1s on here too. That's why I asked a question. I'm expecting some 1s, but we're gonna go ahead and we'll just continue as normal. You know what I mean? So we're just gonna go over where we were at last week very quickly. So the platform that we're on right now, this is TradingView. TradingView, a lot of people get it confused, where TradingView is not a broker, right? You do have the ability to connect your broker to TradingView. That way you can just, press the buy and sell button on TradingView itself. But what I like to use it for is not for that. Instead, I like using TradingView for just straight up analysis, right? To look at a chart and make my prediction on what I think is going to happen. And then I either go on my phone or I go on my computer and I take that analysis and then I go to my broker to press the buy and sell button. Okay, so TradingView, for those of you guys that don't know, strictly is in my opinion, better for analyzing a chart. Okay, and you can connect your broker to TradingView, but I also do think that that causes like delays in your trade. You know, if you press buy right now, I don't think that your trade automatically gets executed into the market. It usually gets delayed a couple of seconds potentially. Or if there's like a connection issue, then it might be, 5 to 10 seconds. And not that that's like the biggest deal, but depending on, your leverage and depending on, your speed of a trade, if you're only in your trade for 2 minutes, then 10 seconds makes a big difference. You know what I mean? And especially if you're trading during the news, 10 seconds can make, a 30 pip difference pretty much. You know what I mean? So I personally don't use TradingView for that. I just like to use it for analyzing my trades. Okay. But, so to continue off where we were last week, right before, the stream ended, the market was right around here, right? And we made a prediction that the market was initially going to break down a little bit farther into this blue zone, and then we were going to make our continuation higher. Okay, what ended up happening instead is we broke to the upside and we retested this triangle pattern, or this descending triangle, or this descending trend line, if you want to call it that, right? So what ended up happening, excuse me about my sniffles too, my allergies have been kind of bad today, but yeah, anyway, so we retested that trend, and then that is where we made our price takeoff. Okay, so what we ended up doing is you just have to make adjustments when this stuff happens, right? A big thing that people struggle with is when you have like a perfect plan about what you're expecting the market to do, and it sometimes does something a little bit different, even though the analysis was still correct, right? We still ended up going higher, obviously, and we were still able to, take profit, or hit our take profits. The plan initially, though, was for us to break down to here, hit this blue zone, and then go higher. Okay, that didn't happen clearly. So what do you do in those situations, right? So what matters is just using your discretion. Okay, on a stream I did over a year ago, I talked pretty much for like 2 hours just about using your trader discretion, okay? Because a lot of times you'll miss opportunities, or you will force yourself to get into a trade that isn't really there, right? And both of those are not good. You know what I mean? If you miss an opportunity, that means you're missing money. If you force yourself into a trade that's not really there, you're either going to lose money, or it's going to take you a longer time to make money on that trade because it's not set up yet, okay? So in this kind of situation, what do you do and how do you leverage your knowledge on trading? Okay, so the reason why we were able to kind of acknowledge and get in at this pivot point here, where we broke out, we retested, and it continued, really is just because you have knowledge. Oh, don't tell me that, bro. My mouse literally just died. Okay, but so we'll do this because I can touch it a little bit. And then I have to go get a wire to plug my mouse in, so bear with me on that. Okay, but I have a touch screen, so we're chilling for now. Okay, so the way that you know ahead of time, right, is you just have to look at the pattern that we were already in. Okay, so this initially, this blue zone here was our, I'm not going to go over all of it again, but this was our blue zone, our cash flow zone for our Fibonacci sequence that we like to use in our strategy. Okay, so we're just going to talk, cover that really quick, right? This blue zone that we have is the Fibonacci that we marked before. Okay, so we already knew that that was an area of interest, right? So number one, what happens a lot of times is on these Fibonacci structures, what happens is, or something, not know what happens, what you need to acknowledge is that these zones, okay, are your ideal place for the market to go. Just because it's our ideal place doesn't always mean it's going to go there exactly. Okay, what happened here, though, in this situation, is we came up and we were teeter-tottering on the zone, right? We still hit the zone. We still acknowledge that the zone is there, but we just didn't sink deeper into it, which is what I expected to happen, right? But since that didn't happen, we can still take note that the market did, in fact, touch this zone 1, 2, 3 times, right? We still touched that zone 3 times, and we bounced off of it 3 times, okay? And it's basic, basic support and resistance. These are things that you learn in your first month, right? How many points does a support structure, a resistance structure, or a trend structure need to touch in order for it to be considered valid, right? Usually it's 2 or 3 or more, right? Ideally 3 or more, right? But 2 or 3 you can get away with. Okay, 2 you can get away with, 3 is ideal. Okay, so in this situation, even though we didn't sink deeper in to that actual fib zone, we still did touch it 1, 2, 3 times. 4 times if you want to be technical about it, right? And at that point, that tells us, okay, well, the price is hitting that zone and then it's starting to bounce off of it. It's rejecting off of that price, right? It's not wanting to go lower. So that's discretion point number 1, is that even though we're expecting on a Fibonacci structure for it to go into that zone and hold before moving, that's not always going to happen. So we need to look at other context clues to give us an idea, is this zone actually valid or not? Is it actually being respected, right? And the way that you do that is you look to the past, right? So we go to the past and we see those previous touch points, okay? That's number 1. That's your first point of discretion, thinking, okay, even though the market didn't go where we wanted it to go, we still could potentially get this move higher, right? Even though we wanted to come here, we didn't get that. Instead, it just shot up and went, right? Whenever we first see this break, well, let me try and mark it. This break right here, right? When we first see that break, that's when, and that happened like right after we got off the call too, also, like maybe like an hour after we got off the call, right? The way that you know that that's an actual break of structure is by using your context clues from the previous market, right? So you look at previous market. So you look to the left, right? You're looking at the chart, you look to the left. Has it been bouncing off price? Yes. Okay. So that's confirmation number 1 that it's safe to get in. That's all we're going off, is that it's safe to get in. Okay. Confirmation number 2, right? Let me go back. Confirmation number 2 is going to be this triangle pattern. Okay. Now, we talked about this last week as well, so we're not going to go into it too long, right? But there is something that's known as a balance point, right? And a more proper word for it, and what it's actually called in investing, is a point of equilibrium, right? A point of where is the middle of this triangle. All right. So if we're going to look at the triangle, these 2 dashed red lines, where is the middle, right? The middle is probably right around here, more or less. Okay. And what we started noticing is that in the beginning of the triangle, right, you have these big healthy movements. But when you start getting closer and the triangle starts closing, you get a lot more choppier movement. Okay. So that choppier movement is telling us, and we talked about this last week, right? The choppier movement tells us that pressure is building and that an aggressive break of structure is about to happen. Okay, that's what the triangle is telling you, right? So whenever you're seeing a triangle pattern forming, that is just a form of accumulation. Okay, accumulation is what that is called. Okay, so using that knowledge, the only 2 things, and you can go back test on this, okay, the only 2 things that are ever going to happen at the end of a triangle pattern, at the end of an ascending triangle, a descending triangle, a pennant pattern, whatever you want to call it, a wedge, whatever different formation that happens, usually 99% of the time, the only thing that is going to happen at the end of that formation is an aggressive break to one side or the other. The market's either going to go up really fast or the market is going to go down really fast. Okay. And what happens on top of that usually is once you get the break, let's say we're going down, for example, once you get the break, usually you're going to come and retest near that zone. Okay, what is a retest, right? A retest means that the market is going to break out of the structure. Okay, part 1, we're going to break out of the structure and then return back near that structure, okay, to solidify the fact that you're breaking out of it. Okay, on an institutional level, what's happening, right? What's happening is when price breaks, okay, usually what happens is that this is just a form of, not manipulation, I'm not going to say you're going to say it's manipulation, but it's just a form of orders being built up, okay? When the market breaks down, okay, that encourages more sellers to get into the market. It also encourages more buyers to get into the market. Why? Why would sellers get in? Sellers get in because they see that the structure has been broken to the downside, okay? Makes sense. Buyers get in because they're hoping to catch the bottom of a move, right? So when buyers get in here, right, what ends up happening is that the market usually will come and retest an area of the structure, usually to stop people out, right? Either to stop people out or to get people to just get out entirely, right? But if you know what you're doing, that gives you an opportunity to get into the market on the retest, okay? It's a very simple strategy. If you guys want to look it up, I have videos in the course, and thousands of videos are on YouTube, mine included, but it's literally just called break and retest strategy, right? It's the simplest thing that you can learn in trading. It happens all the time, okay? But you need additional knowledge points in order to know if it's a good break and retest, okay? Or if it's just, you know, what we call a fake out, which I have videos about that inside the program. So this would be considered a breakout or a fake out, right? So a fake out is what happens when the market, let's just say this happened, right? The market broke to the upside, everybody starts buying and everyone keeps going in. A fake out would be where the market goes down instead, right? That would be considered a fake out because you got faked into buying and then you got stopped out. Okay, in a true breakout though is what we had here where the market broke, retested, and then continued, right? So those are the only two things that are going to happen, right? You're going to get an aggressive break to one side or the other, either going up or going down. So using that knowledge, again, we had the 3 points on the Fibonacci being touched, right? That's confirmation number one. On this specific trade setup, we already had our other things. We already had divergence. We already had a strong low, for example. But for these new adjustments that you have to make, because the market didn't do what we originally thought, this is how you would make a quick pivot on your analysis, okay? So the only two things that you have to notice, right, is number one, was the Fibonacci previously respected, right? The answer is yes, yes, and yes, right? Yes to all three. So it was respected, right? Number two, did we get a break out of the pattern that we were in? Okay, so we were in a triangle pattern. Did we get a break out of the pattern, right? You ask yourself that question while you're looking at it. Did we break out of the pattern? The answer is yes. Okay, now using that knowledge, what happens when you break out of a pattern, right? You're going to go in one direction or another aggressively. It's not going to be a slow move, okay? And I'll show you guys a little tip on how to measure your take profit distance on when you're trading breakouts on patterns, right? Because it's a very easy way to do it. But we'll do that in a second. For right now, what we just want to make sure is those two things. Was the fib respected? And did we break out of the pattern, right? Yes and yes. The third and only really other question that you need to ask is, does this look like a genuine breakout or does this look like a fake out? Okay? Using other previous context clues, right? It's a little bit easier to make that assumption, to make that analysis, okay? And I'll show you. So let me delete this. It's a little harder because my mouse died, but we're good. All right. So we don't want to enter. So there's two different instances where you can enter. On this one, I did the opposite of what I'm about to tell you, where you enter as soon as the market breaks out, which you could do, right? If you're willing to lose a little bit more often, right? But if you want to be a very careful trader and a very precise trader and a very accurate trader, the more, not smart thing to do, but the more patient thing to do is to wait for the retest, okay? So I got in as soon as I saw the market break out of that triangle, okay? That's a little premature, right? Did the trade end up going in my favor and did I win it? Yes. But could I have waited for a better entry? Also, that is yes, okay? So the way that you don't potentially lose money unnecessarily, or you can get the maximum amount of pips, is once the market broke, right, it did this small little pullback, right? This tiny little pullback right there. Okay, we're going to zoom in on that a little bit. Okay, so we're just going to look at where that pullback came to. So we're going to take our little line. We're going to take a line tool, and we're going to put it, we're going to go like this. Make it here, and we're going to drag it to there. So that's where the market retested to, okay? If we extend this line out, okay, sorry. Right, so if we extend that line out, then we can look to the left again. We can look to the left, and we can notice that there is resistance there. There is some support there. There is other areas where the market was hitting and it would reject. Okay, so what all I'm saying with that is when we broke out, the market came and it retested this previous resistance level. Okay, in simple trading 101, previous support becomes new resistance, previous resistance becomes new support, right? So at this point in time, it was resistance. Every time the market came up to it, it got knocked back down, right? So same thing. When we broke out above it, now we come and it's support. Okay, so in that situation, that would be the ideal time for somebody to get in on this trade on that pullback, right? On that retest. And I have videos about this in phase one. I think phase one or phase two of the university, where it's all about just timing pullbacks the right way. Okay. You're not going to get a pullback every single time, though. That's where I said, you could get in on the break. You're just more than likely, like, let's just say, for example, if you were to only take break and retest trades, you would probably win, I'd say, like eight or out of 10, like 8 or 9 out of 7 or 8 out of 10 trades is what you would win if you only waited for the break and retest, right? Versus if you just take the break of structure and you don't wait for the retest, more than likely you're only going to win like 6 or 7. So you're going to lower your win rate percentage, but you're going to get more setups, okay? So it ends up equaling out pretty, similar. Not one is better than the other. It really is just personal preference on risk. You know what I mean? Me personally, I've been trading for a long time. I'm pretty comfortable. And if I lose a trade, I'm not going to, cry about it and think, oh, I'm a bad trader. You know what I mean? So you just pull the trigger sometimes when you have confidence in your other points of analysis, right? But if you're a beginner and you don't really have that confidence and you don't really know what you're doing yet, what I would do and what I did in the past is stick to the most the most probable entry possible, which is the one that is going to happen the most often and give you the win the most often, right? And that situation would be when the market breaks structure, when you wait for the retest, okay? Wait for the retest and you enter on the pullback, and then you'll get a really good entry, okay? Now, how do you know? Let's just say you didn't really watch the stream last week, but you saw a fib, you saw your triangle pattern. How do you know where to put your take profit targets? Okay. A very simple thing that you can do, and that's like a little hack that you guys can do. Okay. And this works, same thing. 90% of the time, it is going to be exactly like what I'm telling you. Okay. And you just go do your back testing and you'll be able to see for yourself. Right. So what you're going to do is you're going to take your measuring tool. Right. The measuring tool is on the left side of the screen. Right. Over here on the left side of the screen. And it's that little ruler. Okay. You're going to take that ruler. You're going to go to the bottom of your triangle. Right. You're going to go to the bottom of your triangle, your bottom of your head and shoulders, the bottom of your W pattern, whatever it is, any pattern you can think of. You're just going to start at the bottom of it, okay? And you're going to take your measuring tool and you're going to measure to the top of it. Let me move this. Right? So we started down here. You're going to drag it to the top of that move, okay? That amount of pips, that distance is going to be the distance on the break. I promise you, right? And I've back tested that literally hundreds of times over the last few years, okay? I promise you, right? 9 times out of 10. The only reason I'm not saying 10 out of 10 is that way someone 5 years from now doesn't say, oh, Ollie's wrong, okay? 9 out of 10 times, the amount of pips of that opening range is going to be the amount of pips that the move travels when it breaks, okay? So right here, we're just going to measure it right here, okay? Here is 49 pips. We're just going to call it 50, okay? We're going to call it 50 pips, okay? Now, all you do, you come to the structure point where it broke, right? Which is going to be right here. That is where the market broke. That's when it came out of the structure. You're going to take that measure point. You're going to do the same exact thing. Let me move this out of the way. You're going to do this. And here, where would 50 pips be? 50 pips is right there. Okay, so that is exactly where I put my take profit a little bit under that because that's also, it lined up with my Fibonacci, right? I'm not going into the Fibonacci right now, but if you go watch last week's video, the take profit target that I put lined up with the Fibonacci that we had on the screen at that time, right? But let's say you don't know how to use fibs. Let's say you only know how to trade patterns, right? You're a beginner, right? First couple months of trading, you're learning how to trade patterns, okay? How do you know where to go? How far do you know where to put your take profit? That's exactly it, okay? You take your measuring tool, you're going to go over here, you're going to measure the bottom of the move to the top of the move, right? 48 pips. That's what it says right there on the screen. 48, 50, whatever number, it doesn't really matter, right? 2 pips doesn't make a difference, okay? That amount of pips, next thing you're going to do, you're going to delete this. How do I delete it? You're going to delete that. You're going to take your trade. You're going to line it up wherever you want it to be. And you're going to put it for that amount of pips. Okay, we're going to go 48 pips. You're going to make it a 3-to-1 risk to reward ratio at a minimum. So, right, a 3-to-1 would be right here. Okay, so we have a 15 pip stop loss and a 48 pip take profit. Okay, and it's going to hit every single time, right? And the only reason I'm not going to go and do back testing on this right now is because my mouse is dead, but I'm trying to make the best example that I can. All right, so same thing. If you had a head and shoulders pattern, right, and the market looks like this, right? You're looking at a head and shoulders. What you're going to measure, okay, is the distance from, oops, hold on. You're going to start at the bottom of the head and shoulders, and you're going to measure it to the top of the head and shoulders. In this situation, it's 27 pips, okay? 27 pips, right? So what you're going to do is we're going to go short because this is a head and shoulders. Head and shoulders is a bearish pattern. That means the market wants to go down, right? You're going to put your you're going to enter here, and you're going to put your take profit at 27 pips or 28 pips in this scenario or whatever. Hold on. Where is it at? 270. Right, so that would be your take profit. And for your stop loss, you just make it a 3-to-1. Why is it doing that? Hold on, let me... What is 27 divided by 3? I think it's 9, but I'm not for sure. Divided by 3? 9, right? So then your stop loss is going to be 3 times smaller. So they're going to be 90. So right now we have a 3-to-1. And I guarantee you that trade is going to take profit every single time, okay? So what I'm getting at, though, to sum up this part of the lesson, is when you're trading patterns, again, I'm going to summarize this. When you're trading patterns, okay, the distance from the bottom of the pattern to the top of the pattern is your distance for take profit, okay? The market is going to move that distance 99% of the time, okay? And I promise you on that. That's like a huge thing that it took me a long time to learn that. And it made trading patterns 1,000 times easier, okay? Do you need to learn how to identify patterns on your own? Yes. Do you need to learn how to see if your patterns are right? Yes, okay? So for those of you guys that are new and are struggling a little bit, do yourself a favor, okay? If you're trying to trade patterns, go into the Cashflow community, go into handbooks. Where is it? Why is this not opening, dude? Handbooks. Well, I wish it would open. Okay, there it goes. Go down, go down. Candlesticks and market flashcards, right? You're going to open that. And there's this picture right here, okay? So I would 1,000% recommend that you go download this picture and print it out, okay? Download the picture, print it out, put it on your computer, put it in front of you, whatever you want, okay? But this will help you just identify your patterns a lot easier until your brain has done it enough times for you to just recognize it on its own, okay? And if you want to spend a little bit of money, you can buy yourself a... So I have like, it's not going to be able to show you too good, but I have this, my computer mat has every single pattern on there that occurs more than likely is going to occur in the market, whether it's candlestick or market patterns. It has it on here. It was like $20 on Amazon. Okay, so if you want to get that for $20, go get that for $20. If you don't want to spend $20, go to the Cashflow app, go to mini handbooks, go to the candle and market pattern flashcards, and go save these pictures. Okay, there's 1, 2, 3. Okay, do yourself the favor and look at these pictures. You know what I mean? And practice identifying them in the market. The only way you're gonna not be able, or the only way you're gonna be able to identify these patterns is if you do a little bit of practice. Okay, but those are the only two things that we did in order for us to use. Why did we go over all this, right? To round it back off and bring it all together, okay? The reason why we went over all this right now, over the Fibonacci being touched and over the triangle pattern being broken, right, is because sometimes when you're trading, you have a beautiful plan, but the market moves without you, right? We had a plan, right, for the market to, like I said originally, come down to here and then go up, right? But that did not happen. So the reason why I'm going over this stuff right now is because I had to think on a pivot. Right, and you have to think fast in these situations because look at how fast the market moved, right? This is on a 15-minute time frame. This trade was done by the time we woke up, right? So you have to get in. We got done with the call at like 9, maybe like 9:30. So it's already a little bit late. You don't want to be on the computer for hours. So you're going to have to do a quick analysis and make a decision. Do you get in or do you stay out, right? And if you stayed out, the trade would have already been left you by the morning and you lost out on money. Okay, so the way that you don't lose out on money is you always just have to be on your toes, right? The market doesn't move like super, super, super fast, but you need to just be aware that the market's always changing, right? And if it doesn't go according to your plan, you just need to be able to make an adjustment, right? We didn't change the strategy at all. We didn't change our analysis at all. All we had to do was add on to our original idea and get confirmation that even though it didn't go exactly where we thought it was going to go, is the trade still valid? That's ultimately what I'm getting at, is creating certainty in the validity of the trade. I'm pretty sure I said that right, right? Validity of the trade, right? So in that situation, the only two things that I did to give myself the confidence to press the buy button was I looked at the fib structure. Did it have previous touches? Yes. Cool. Did we break out of the triangle pattern? Yes. Cool. That's it. You know what I mean? That's really it. And then the second half point that you would want to look at is what was the nature of the break? Was it a fake out or does it look like a genuine break of structure to the upside? Okay. And that again is something that you only get with experience, unfortunately. But again, if you're struggling as a trader, what do you do when you're struggling as a trader, right? If you're in cash flow, all you got to do, take a picture of it, send it in the chat and say, hey, is this a real head and shoulders? Hey, is this a real, break of structure? Is this triangle pattern valid? Did I draw my Fibonacci the right way, right? So instead of having to struggle for years, like I did, to figure all this stuff out by myself, which I did, right? You have the opportunity and the advantage of learning from other people and benefiting from other people's experience to help you have a shortcut. You know what I'm saying? So that is the end of that trade setup. It was a beautiful trade, right? It literally smashed our take profit targets and it completely, I could have held the trade, right, if I wanted to, but I set the take profit and it hit that overnight. So by the time I woke up, it was already done pretty much. But if we measure the trade, this was a huge, huge, huge trade, guys. So we start the move there. We ended up here. That's 130 pips. You know what I mean? If you're trading at $5 a pip, you do 5 times 130. Oops. 5 times 130. That's $650 on a $5 per pip trade. So I only made not that much. I think I was doing $8 a pip on that one. So I always try to make around like $400, like $350 to $450 is what I aim to make. Okay, but if I would have held that at $10 a pip, $10, that's $1,300 on one trade overnight. Okay, and now if you're a beginner and you don't have that much money in your account and you're trading with a 0.1, a nanowatt or whatever it is, right? If you're doing 10 cents a pip, let's say for example, right? If you're trading at 10 cents a pip at 130 pips, you still made $13 on that one trade. More than likely, if you're trading with $1 a pip, you have 10 to 20 bucks in your account. You know, I'm being real. You know what I mean? I know I know where you guys have your accounts at. You know what I mean? So if you have 10 to 20 bucks in your account, you can almost do 100% growth on one really good trade setup. Okay. And is that going to happen every single time? No, obviously not. Right. But when you get a really good opportunity like that, you have to be willing to pull the trigger. That's the biggest thing, is not to hesitate on your analysis. You know what I mean? Again, even if it starts going a little bit different than how you imagined it would go, right? Just trust your gut, trust your analysis, and, believe in what you're doing, and then just pull the trigger, take the trade. And if you lose, you only lose a small amount. If I would have lost the trade, I would have lost like 120 bucks, versus the potential of making 450. It's a no-brainer. You know what I mean? Safely. I saw Christo ask, so basically a fib can be used for more than just one setup. Ideally, yeah, bro. You can use it, so technically even right now, this fib zone is still valid, right? If we wanted to go to here, and we wanted to just do this area is still considered, now will be considered a demand zone, right? If we were to look at it here, right? If the market was to come down here, which it could do, work its way down, hit this demand zone, and then continue higher. That would be something you would see on a higher time frame, like the 1 hour or the 4 hour time frame. That would be a 4 hour move. You know what I'm saying? A 4 hour time frame move, which it 100,000% could do. Would I not bother drawing another fib? No. I would still draw another fib. I would just be mindful of this zone still, right? This zone is still active, right? There was a lot of buying pressure that caused the market to explode at that point. So that tells us that that zone has a lot of liquidity still, right? There's still a lot of traders willing to trade at that price, if that makes sense, right? Whether it's buyers or sellers. You know what I mean? Right now, for all we know, right? There could be swing traders, for example, or institutions, right? That on this same exact triangle pattern, right? They start selling right here. They loaded up a lot of sell orders, okay? And imagine now they have a giant stop loss way up here, right? And that means that they're still targeting a huge take profit level way, 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 way down there, okay? So if that's the case, we don't know if that's for sure, but there is a probability that at an institutional level, there are probably some banks somewhere, some hedge funds somewhere, or some private funds somewhere on the planet that are holding sell positions on this trade right now, right? And now, where would they break even? Okay, where would they be profitable at? Down here, right? Meaning that once the market comes back down to here, that would be an area where a lot more trading activity happens. Either one, those sellers are going to close their trades, right? Which would cause this to happen, right? Which would cause the market to go down. Everyone's going to start closing their sell positions to break even. You know what I mean? Close the loss. You know what I mean? We're just going to take the L, close out with, probably a small loss. And then once all those sell orders are closed, that means that it's open, fair game for buyers to come in and push the price back higher, right? That's a macro move of what could happen with that Fibonacci. So to answer your question is yes, like more than one trade setup can happen off of a previous fib, right? And why is that? It's not because the fib is anything special, because what is a fib? What does a Fibonacci tell us? All the Fibonacci tells us is points of interest, right? It's a liquidity point, right? It's a supply area, a demand area. There's hundreds of thousands of demand areas on a chart. You know what I mean? From all the time back into 1980 up to now, right? Every single one of them technically still could happen, right? But what do we do in order to identify when it's going to get to that point? That's when we use smaller fibs on smaller time frames, right? So for this example, what would we do? Okay. Let me delete this because that's not relevant anymore. Now to get into today, what I would honestly personally do is two things, right? There are two possibilities that I can see right now, okay? We're going to go off of the short term, because we don't want to analyze too far back, right? So what I would look at is the current market structure. Let's look at support. Where would we say a support line is? I'd say there's one right there, right? Where is resistance? I'd say there's one right there. We already kind of have those marked up using our whole number zones, right? This one is 7,000. This one is 750, right? 750, right? Both of those we already have marked up, right? So what I would do is, since this level is the one that most recently broke, right? Most recently broke down, and now we're retesting, right? I would assume that a bearish Fibonacci would be the most ideal for this current situation right now on a 15-minute time frame. Okay, if we're looking at a swing trade where we want to hold our position, some of you guys are swing traders, especially a lot of my older students. A lot of you guys don't like to be on here, every single day. I have some students that are in their 50s and they only take like one trade a week or per month, even sometimes. Okay, so the swing trade would be drawing the fib from here, the swing low of the chart, the swing low, draw the fib from here to here, right? This would be a bullish Fibonacci structure, okay? Now, the reason why I wouldn't want to use this one right now is because this is a high time frame fib setup. That's a huge amount of pips, okay? Because that means that, oops, what did I just do? What the fuck? Okay, let me do that again. The reason why I can't plug in my mouse right now is because it uses this, it's a Type-C, and a Type-C is plugged into my camera, and I only have one. So we gotta make do, okay? But, so we're gonna go back here, bottom of the swing low to the top of the swing high, okay? Now where do you go next, okay? It all depends on, not really it all depends, right? It kind of does depend. It depends on the strength of that fib structure itself, right? This was an aggressive move, but then we started consolidating, okay? That tells me that yellow zone is not going to be respected, right? So that tells me if yellow zone isn't going to be respected, what is the next zone this needs to go to? I'm going to let you guys tell me that in the chat. It says that there's 5 people watching right now. I'm going to ask you guys, because I already know. Where is, if the yellow zone is disrespected, where is the next place that this is likely to go? I'm going to give you guys a second while I clean this up. If yellow zone is no bueno, where are we going next? Where is the next possibility of where we could go? I'm going to give you guys some time to think that out. Jamara says green. I'm not going to lie to you. I'm not going to lie to you and tell you you're right. I'm not going to lie to you and tell you you're right. That was a good guess. That was a good guess. But not yet. Not yet. Anyone else want to try and take a guess? We've talked about fibs a lot, my people. And you know what? I'm proud of Jamars because she's the only one that took a guess. She's the only one that took a guess. Christo says blue. That is the right answer. That would be the second option. Okay. Why? So we have to just remember, what do fibs tell us? Okay. Fibs tell us where the market is planning to go before it takes off. Okay. So in this situation, let me delete that. Okay. In this Fibonacci, in this situation, we came up to this high. Option 1, you hit the yellow zone, you go up. Okay. Option 2, you go to the blue zone, you go up. Option 3, you go to the red zone, and then you go up. Those are the 3 options with the fib. Okay. Since option 1 has already lost, right? Technically speaking, right? We're still here. You know what I mean? We've already been floating in here. Let me move this over here. We've already been floating in here for a little bit. Could we just continue higher? You could, right? But based off of just how I think about it, just based off of how I'm seeing it, what I think would be a little bit more likely to happen, right, is we work our way down to the blue zone and then go up, right? So now what we need to do again, if that's the macro move that I'm expecting, right? If that's the whole big move that I'm expecting, what I think will happen short term is we'll go to the blue zone at a minimum. So let's measure from current market price to the blue zone. That's still 45 pips. Okay. That's a big move. That's a whole trade. You know, and that's literally a whole $450 that you could get in on potentially. So how do you know if it's worth getting in on? Okay. We need to draw our fib on a smaller time frame, right? So we're on a 15-minute time frame already. So now what we do is we need to measure a more recent move. Okay. All right, let me okay, I know where it's at. I don't need to draw anything. So now what we're gonna do is I'm gonna, since what I already said earlier, let me reiterate what I said. This was our support structure. We broke below it, we retested it. Technically, this would be considered a break of bullish structure, right? We're starting to make lower lows. What does that mean? Right? I'll show you, right? If this is a low, right? This is a high. This is a low. This is a high. This is a low. This point, this high, is equal to this high. That means that we're not going higher anymore. Note that. That's the first thing. We're not going higher anymore. Okay? Now, we have an equal low. That gives us confirmation. Again, we're not going higher anymore. Right? What happened after that? We have a lower high. Right? You see how the market was going like this before? Now, we're starting to go like this. Right? These are considered higher highs, and then this would be considered a lower high. Why is that considered a lower high? Because this high, it sounds stupid, right? But this high is lower than this one, okay? So that means that we're changing structure, right? Bears are starting to get a little bit more control in the market. Sellers are starting to get a little bit more control in the market right now, right? So what we're going to do, let me click back on all this. What I would do is I would draw my fib. In this situation, I would draw a bearish fib, okay? So we're going to go to the most recent high of the chart, and we're going to drag it down to the most recent low, okay? The most recent low, right? Now, if we look at it like this, let me delete this line, no, this line, okay? If we look at it like this, now this fib zone lines up right with our take profits, right? The take profits are these green zones right here. So Jamaris, to answer your question, what happens is when you hit this yellow zone, let's just use this yellow zone for example, when you come to here, when the market starts moving for the extension, then the green lines would be your take profit targets, right? So take profit 1, take profit 2, take profit 3, and then take profit 4. Okay, so the green lines are your actual profit target points when you're trading, but the market needs to make the retracement first before it goes to the take profit targets. So to just let you know that really quick, right? So now what this tells me is that on this time frame, right, on this 15-minute time frame, this is the most recent move. Okay, even though like this, even though all of this was like the main move, that's a big time frame trade. So if you're not a swing trader, you're a day trader like me, you know, you're trying to take a trade every single day or every session potentially, that's way too much movement to measure. My bad, let me turn that off. Yeah, that's way too much movement for you to be measuring on a trade that you're expecting to take tonight, for example. The market's not going to make that fib happen tonight. But what could happen tonight is, what could happen tonight, the market comes down to here. This yellow zone could get respected, and we go down to there, which is exactly where we had just said was the blue zone if we were to draw the fib on here, on this move. Okay, so what we basically did is we inverted the fib to make the buy zone on the bullish fib be our take profit on this bearish fib. Okay, I know that sounds a little bit confusing. You can rewatch that part if you need to, but basically, I'll draw it for you. Actually, I'll draw it for you. Let me make this a little smaller. So we're gonna put our fib, start it here. We're gonna drag this one. Just gotta pay attention. Look at you guys. Just gotta look where your eyes are at. Okay. So the blue zone on the fib we just drew, the bullish fib is here. Okay. Just remember that, right? You guys see the blue zone right here, right? It's right here. Okay. The blue zone is right there. Now what I'm gonna do, I'm gonna delete the bullish fib. Okay. Where exactly is that blue zone at? That blue zone on a bearish fib lines up perfectly with our take profit 1 or our take profit 2. Okay, so what I'm getting at now is you have two options. You can either, one, wait for the big move to happen where you get in down here for buys and you ride it on the way up, all the way up to there, which probably is going to happen over the next couple of weeks, right? Especially with interest rates. I don't think that interest rates are going to get cut anytime soon in September or December. I don't think it's going to happen at all. That's a whole other conversational point, but I don't think interest rates are going to get cut. That means that the US dollar is going to continue to get a little bit weaker, meaning Euro USD is going to continue to get a little bit stronger, right? And the Euro is going to continue to gain strength, okay? So, using that knowledge, right, even though we might come down to here in the long run, why not take opportunity now? You know what I'm saying? So what we did is we inverted the fib. We made a bearish Fibonacci, this one right here, and our profit targets would be the buy zone. Does that make sense? You know, so far, I feel like I'm not making sense on that, but I feel like I am. So if that makes sense so far, do me a favor and like say that makes sense, or say like drop a 7 or something. Drop a 7 if it makes sense, and drop a 3 if that does not make sense. And I'll note that for the future. So 7s if that makes sense. We're understanding why we're looking at sells, or 3s if it doesn't. 3s if it doesn't make sense. Exactly, Christo, exactly. So basically you have the opportunity to catch both trades. Exactly. Right? So using that knowledge, oops. Let me delete this. It's a little harder without a mouse, but you don't make excuses. You make adjustments. That's what you do. Let me delete that. Okay. So this is our trade setup as of right now. Okay. Now we can draw some other things if we wanted to. We could say, let's not force it either though. Let's see if we have a trend that has been broken at all. I would say this. Oops. Hold on, let me fix it. I would say this, okay? So very similar to like what just happened, pretty much, okay? Is we had a triangle forming. It wasn't the prettiest triangle, right? We had a fake out happen there, but then what happened? We get close, we start building pressure. Then what happened? We broke, and where are we at right now? We're retesting the triangle. We're retesting equilibrium right now. You see what I'm saying? Exactly what we just talked about. It's the exact same setup. 99% of the time, it's the same shit that you're going to see, right? So we're retesting this triangle pattern, and we're retesting the middle equilibrium of that triangle. So this looks like it's a perfect break and retest, right? So if we were going to get in on sells, this would be the ideal place to get in, which we might do, right? So now we're going to go do some further, a little bit of analysis just to confirm what we're already thinking, okay? Let's look at this. Let's zoom this up a little bit, right? And that also would be a break in retest of this 750 zone, right? Over here, right? Which is a whole number zone, which is a mental zone, psychological zone. We've already talked about that also, meaning, again, sells could hold. That's all that's telling us, is that sells could hold right now, meaning that we could potentially sell. That's what that means. Okay. To make this a little bit cleaner, oops. Again, we talked about this last week as well. We're going to take our rectangle. We're going to mark it. Boom. We're going to mark it here. Leave it. And now we're going to delete the fib, because I don't want it to be there. I don't like looking at it, right? It makes it too much, right? It makes it too much, right? And if you want to just not miss out on a trade, even better, what you can do is adjust this even more. Just take the box that you just drew. Come on, dude. And just put it right in between that whole number zone, right? That's your area of interest, okay? So what we're looking at, if you want to be very patient, if you want to be a very patient person, if we're looking for sells, our bias right now is sells. We're not going to look at bullish stuff, okay? So now what we're going to do, take our brush. We're going to wait for one or two things. That or that. That's it, right? You're going to wait for the market to break one way or another. That's it. And then what did we say happens when you break the structure? When you actually make the move, what's going to happen? It's going to move, right? It's going to be an aggressive move. How far do you know where to put your take profit? I'll tell you. I'll tell you. You got to measure bottom of the move to the top of the move. That's 50 pips. Are we going to be greedy and really target 50 pips? Probably not. But what was the number that we said already? I think we said like 45, right? So if we wanted to go short here, we can sell right now. Come on. We'll put that there. And now we will target stupid thing, dude. Hold on, I'm trying to fix this, guys. We're going to target, once I can do it, 50 pips will be right there, okay? I'm going to redraw the bullish fib. That way you guys see where it's at, okay? But the bullish fib ended around here. So I don't want to be greedy. Let's play it safe. Let's just do 45. Let's aim for a 45 take profit, which is standard. If you're in cash flow, that should be standard for you, right? It shouldn't be abnormal to catch 45 pips. And to save ourselves some time, I'm just going to type it in. Profit level is 450 ticks. Ticks is micro pips, pretty much. So 45 pips, you have to add the 0, okay, pretty much, right? And then take profit, stop loss is going to be 150, right? That represents 15 pips, okay? 10, or little tip for you guys, because some of you guys don't know this, okay? 10 ticks, it sounds stupid, right? But in the video about pips, I go over all of this. So that's in phase 1. So if you don't know how to count your pips yet, you got to go watch that in phase 1 and practice, right? Again, practice is the biggest thing, right? But a little rule of thumb, that way you guys know this, is, again, thank you for doing another live. I greatly appreciate it. Thank you, Jamar. So hope you have an amazing night. I'm going to not make this too much longer, so if anything, just watch the rest of it tomorrow. But more than likely, that we have an idea. We're looking at sells right now, and I'm probably going to get in on a sell. If I do, I'll post it in the app, and you can just get in if you want to on your demo account as well. But I appreciate you being here. So Jamar, is that what you guys don't know? For those of you guys that don't know, her and her husband, they have a beautiful little baby. And he works full-time, and she's working full-time from home as well, and getting into trading still, man. So a lot of people make excuses when you're young and fresh, and you have all the time and energy in the world, right? But, they're still at it. They're making it work, right? She's made no excuses at all throughout this entire journey since she started with us. And she's killing it. She's learning, so I'm super proud of you, of course. And you got to realize, she's a role model for other traders to aspire to, to be like. A lot of times, students message me complaining because they're in college and they're tired and they're sleepy. You know what I'm saying? You're sleepy from what? You know what I mean? But granted, again, when you're in a position when you're older, you have bills to pay, you have a mortgage to cover, you have a baby to feed, these excuses don't matter as much. So, she's here right now. It's 8:30 at night. I'm pretty sure we're the same time zone. So it's 8:30 at night. And she's here learning how to trade. I'm sure this is not what she wants to be doing. Okay, so just use that, for your own motivation as well. That doesn't matter what your situation is, what your current life is like, right? If you have a determination to learn and grow, then you can go ahead and learn and grow. So I'm super proud of you, and I appreciate you being here. Exactly. Look, she's reading to her 2-year-old daughter right now, and she's still watching it. You know what I'm saying? So, but yeah, so I'm more than likely looking at sells, and if I do end up getting it on sells, then I'll let you know. And I'll post it in the app. So I appreciate you being here, and much love as always, and I'll see you next week as well. But to finish what I was saying here with the ticks, right? So little rule of thumb is 10 ticks is the exact same thing as 10 points. If you hear somebody on Instagram or Facebook or TikTok or whatever platform and they say points, right? That is the exact same thing as ticks. Okay? 10 ticks equals 10 points. Okay? 10 points equals 1 pip. Okay? I'll say that again. 10 ticks equals 1 pip. 10 points equals 1 pip. Why? Because ticks and points are the same thing. It's just a different word. Okay? So on TradingView, it says ticks. Okay? If you just only put in 15 instead of 150, your stop loss is going to literally be almost 2 pips, 1.5 pips. That's nothing. That's this fucking big. You know what I mean? You'll get stopped out. Very easy mistake to make. Okay, I did that myself a couple times when I was younger, and it pissed me off. I'm not even gonna lie to you. Okay, so it's something that you need to know. Right? Anytime that you're measuring on TradingView, it is going to measure it in ticks. Okay, so if you want a 50 pip take profit, it's actually going to be 500 points, 500 ticks. Okay, that's why here I wrote 450 because I want a 45 pip take profit. Right, you just divide it by 10. Right, and it's not even that hard. It's a stupid thing. I don't know why they measure it in points. Really, it's honestly because some traders trade very small movements with a lot of money. Right, me, I like to catch a normal movement with medium money. Right, some traders will try to catch a small movement with a lot of money. So I personally think that's a lot more risky and stupid, if I'm being honest, unless you have, millions and billions of dollars, but most of us don't. So I don't do that. Okay, so again, closing that off, ticks, 10 points equals 1 pip. Okay, so we're putting 450 ticks because we want a 45 pip take profit. We always want to go for a 3-to-1, so we're going to put 150 ticks for a 15 pip stop loss. Okay, so we're going to press enter. And now that is what our trade will look like, right? We're literally, as we're speaking, we're starting to get the breakdown. Okay, right? It's literally happening right now. So I might. Let's look at this for one more second. Let's see if we're gonna get in. Let's see. We're dropping on the RSI. That's not ready to buy. What do we got here? That says a weak low on the 5-minute. What did that say? Weak low? Weak low on the 5. Strong low on the 15. Let your boy do his thing for a second, guys. Let me do my thing for a second, guys. Let me look for a second. Let me look. Because I don't want to miss the move either if it's happening right now. We got the cross on the 5-minute. That's good for us. Auto fib. I didn't even mean to put that on there. I don't care about that. Higher time frame candle. Higher time frame candle tells us that it's bearish for the most part. 15 minutes says bullish. Hour says bullish. 5 minutes says bearish. Let me do this. I want to say fuck it, guys. Excuse my language, but I think that's a solid trade, if I'm being honest with you. Right, and to close this off, our take profit. Let's redraw this bullish fib. We're going to draw it from here to here. Where is our take profit? In the middle. Why is it doing that, bro? Excuse me, guys. Excuse me. We're going to draw the bullish fib. Where is our take profit? I was trying to say Take profit is right there in the cash zone on the bullish frame, on the bullish Fibonacci on a higher time frame. Honestly, dude, I think I'm wanting to get in on this. Our trading view says that buys are more likely. So what I will do, this is a little bit of a higher risk slightly higher risk, okay? What we're wanting to do is move this stop loss while this trade is moving. So once we get 5 pips in profit, move your stop loss from 5 pips to 10 pips. When you're 10 pips in profit, move your stop loss from 10 pips to 5 pips. When you're 15 pips in profit, move that stop loss to $0, and it's a risk-free trade. That's more than likely what we're going to do. Matter of fact, I did it last week, and we won. So I'll do it again this week, and I will put my money where my mouth is, ladies and gentlemen. Let's go to a 1 minute really quick. Let's see if we got the best entry possible. We're getting a pullback right now. Bucket. What is the spread right now? Spread is not too bad. All right, I'm in. I am in, guys. So what I'm going to do now is, in order for me to send the trade out, I do need my mouse. So we're going to... I'm in on this trade, though. I think it'll be good. It's even if we lose it, not that big a deal. I'm going to lose $100. Lose $100 to be wrong, who cares, dude? Right? Same thing. That's a big thing, too, that happens with a lot of traders, is you guys hesitate too much. You know what I mean? Where it looks like a good setup. We have 4+ confirmations. You take the trade, bro. You know what I mean? If you're wrong, you're wrong. If you're right, you're going to be happy. You know what I mean? If I wake up tomorrow morning and I'm right, even if I'm only 50% right, if instead of making $400, I make $200, okay? You know what I mean? What did I have to do for it? Did I have to go outside and work for it? No. Did I have to go outside and, bust my balls for it? No. All I had to do is analyze a chart and press a button. And if I was doing this by myself, too, this would have been done in, 5 minutes, pretty much. But, we're taking our time, we're explaining it. You know what I mean? So what I'm saying now is, could this trade lose? Potentially, yeah, it could, right? But are there reasons why the trade will lose? Not as many as if we were to win, I would say. I think that if anything, right, worst situation comes to worst, we don't hit full TP. Let me delete that fib. We don't hit full TP, right? Oh my gosh. Excuse me. Right, we're up here right now. Right, move came down. Boom. We're in the fib zone. I think we can at least come down here, retest this previous support area, and then go higher, right? So let's say we only got halfway. That's still 18 pips, but that's $108. That's still $180. You know what I mean? I'm not going to complain. I don't think you're going to complain either. Let's say you still have a smaller account. Excuse me. But you have a smaller account, and you're trading with, again, let's say $1 a pip. That's $18. Some of you guys have a job that pays you less than $18 an hour. Literally, I know. You know what I mean? And when you think about it like that, why would you not just want to do it? Why would you just not trade, bro? It makes no sense for you not to take the trade. When you're that's the thing. If you're on an hourly income job, it's a no-brainer. It's a no-brainer. Just take the freaking trade. You know what I mean? Because even if you lose it, it's not that big of a deal. But if you win it, you just gave yourself an hourly raise without having to spend hours at your job. You know what I mean? Imagine if you only hit $25 per trade, right? And you win 4 trades a week. That's kind of high. Let's just say 3 trades a week, right? That's $75 a week in profit, right? You do that times 4, right? That's a $300 monthly raise that you gave yourself, okay? And that's not a lot of money at all, right? But what I'm going to tell you right now is that I guarantee all of you guys that are watching this now and in the future, if you go up to your boss tomorrow and say, hey, can I have $300? They're going to tell you no, right? More than likely. Now, let's just say, oh, what if no, I have a cool boss. My boss will give me $300. Cool, right? Let's just double the number, right? Let's just say you get up to $600 a month in profits. Ask them for $600 a month. Raise. What does $600 a month equal out to? That's $7,200 a year, right? You're going to go up to your boss and they're going to give you a $7,000 raise just because you asked for it, for not doing extra work, not taking on extra risk, not doing anything extra with your time. more than likely they're going to laugh at you. They're not going to give it to you. You know what I mean? If anything, they might fire you and hire someone else that's willing to take less money than you are, is more than likely the situation on how it would go, right? Even more unrealistic. Let's say you stay consistent for 2 months, right? In 2 months, that's all it takes. I've helped dozens and dozens and dozens of students over the last few years get to over $1,000 a month in profit, right? Net profit, okay? Including losses, including days that you don't trade, and everything in between, okay? If you're making $1,000 a month, are you going to be sad? No, bro, you're not going to be, right? You know, how many years would you have to work at your job in order for you to get $1,000 monthly raise, a $12,000 raise yearly? Just think about that. You know what I mean? Just think about that. More than likely, it's not going to happen. Okay. And now imagine you keep doing it for 2-3 years, 2-3 years, another 2 years, right? When you start making $300 plus per trade, man, you will never look at it needing a job again in your entire freaking life. It'll just seem stupid to you, right? It'll just seem like it's a waste of your time. Like not that you're not worth more, right? I'm not going to sit here and say you're worth more. Everyone here, you know, you're worth what you put in. I would say that. You're worth what you put in, right? But I don't think anyone here should settle, right? Settle for what someone else tells you that you're worth. You know what I mean? You should give yourself a number. Hey, I think I'm worth $300 a fucking day. You know what I mean? At a minimum. You know what I mean? And then eventually the number gets bigger. Now it's $350. Now it's $450. Now it's $500. I've had days where I made over $1,000 in a single day, multiple times over the last few years from trading, from not doing fucking anything, from doing what I just showed you. Okay? There are people that are way smarter than me, way more physically fit than me, way more, you know, mentally attuned than me, and they have a fucking minimum wage job. You know what I mean? But why? Because you limit yourself to knowledge that you have, right? Knowledge can change your situation, right? Information can change your situation if you work for it, if you let it. You know what I mean? But information without application is a waste of your fucking time. You know what I mean? Why be here if you're not going to be trading, right? I have some students that I've been trying to drag, dude, over the last 4 years to trade because I care about them. They're my old friends. So I try and push them. Hey, man, why aren't you trading? Hey, bro, take trading seriously. XYZ, XYZ, 1, 2, 3, right? But nothing changes because they aren't the ones taking action. You know what I mean? Eventually, I have full confidence that one day I will be making over $100,000 a month trading. I know it's going to happen, right? When is it going to happen? I can't tell you when, but I know it's going to happen, right? Why? Because the math makes sense, right? If it makes numbers, it makes sense. And if it makes sense, it makes dollars. You know what I'm saying? So you just have to have that confidence to pull the trigger. Ultimately, what I'm getting at, okay? If I lose this trade, is it the end of my career? No, it's not, right? I just take a trade again tomorrow, okay? But if I win this trade, I'm going to be happy waking up tomorrow to a few $100s that I didn't have to work for. You know, the way I worked for it was up here. You use your brain, right? You use your brain instead of your body, right? Every job on the planet, 99% of them, you're using your body to do something to benefit a company, right? Unless you're in a very high corporate role, you're not using your mind to make money for you, okay? Trading allows you to use your mind, use your brain, use your intelligence to make money, okay? You don't have to talk to people. Right? Is trading the highest income skill you can do? No, right? I know people that sell life insurance, bro, that make 20, 30 grand a month. You know what I mean? And but what are they doing all day? You know, they're picking up the phone and they're going crazy. You know what I mean? Selling life insurance, right? You're having to talk to people. You're having to do business. You're having to learn how to use a CRM. You're having to be on your computer all day, talking to people all day. You don't have to do that with trading, right? All you got to do is look at your computer, be by yourself, and press a button. You know what I mean? I wouldn't trade that knowledge for anything. You know what I mean? So I say that to encourage you guys. If you didn't take the trade tonight, do your own analysis and take a trade. You know what's going to happen tonight? The market's going to do one of two things. Okay, I promise you. One of these two things is going to happen. Right? Market's either going to go up or, oops, I'm trying to draw it to make my emphasis. The market's either going to go up or the market's going to go down. You know what's not going to happen tonight? That. Okay? The market's not going to wait for you. That's what I'm trying to get at. The market is not going to wait for you to feel comfortable to get in on the trade. So if you don't just learn to pull the trigger, right? Don't just pull the trigger stupidly either. Don't just take trades because you think it's going to go up or down, right? Do your analysis and trust your analysis, right? Trust your trade, right? You're not learning mumbo jumbo, right? Your boy knows what I'm talking about, okay? You know what I mean? I know how to trade, you know what I mean? I know how to look at a chart and make an analysis about it, right? I've been doing this for fucking years, so I know what I'm talking about, okay? It's not the big deal. It's not that big of a deal. You lose a trade, you lose a trade. But the only way you don't make money, the only way you don't make progress is if you wait. Okay? You have to take action. You have to make a decision. You have to take a jump, right? So, whether the jump is investing into the mentorship, if you're not a paid student in Cashflow yet, or, you still have a balance or whatever the case may be, make a decision, man. Make a decision, right? And go all in on it. If you are trading with us already, right, you have to start making daily decisions on your trading. Okay, just pull the trigger, right? And you'll be amazed, bro, how much progress you can make in the next 30 days. Okay, by building your trading data, by actually trading. Okay, so that's pretty much the end of my rant on that. Okay, you got to take the trade, right? So we're in the trade right now. I am currently in on sells. As soon as I get off the call, I'm going to send the actual trade breakdown into the Cashflow app. If you're not in the Cashflow app and you're watching this video, join the Cashflow app. I have the link in my bio on YouTube. You can message me for the link or whatever you want to do, right? Go to my website, join the link there, whatever it is. But get in the app and turn your notifications on, okay? And I'll give you guys the trade updates on what happens, right? Whether we win or we lose. No matter what, I always tell you guys what happens with the trades, right? Most of them I end up winning them, but I do lose them occasionally, right? I think this one is going to be good. Like I said, not crazy. I'm not going to, we're not going to get hundreds of pips on this trade, but I think we can get a good maybe 20 to 30. I think we can get 20 to 30 pips on this trade. Sorry, I'm trying to delete that, but I might not be able to. I'll do that after. So yeah, so that's the analysis, right? I went a little bit faster because I had to go over last week's trade as well. What we'll do next week, we're going to cover this trade, right? Win, lose, or draw, whatever ends up happening. We're going to break down why we won it or why we lost it. Right after that, we're going to go into what we think is going to happen next Tuesday, and we're going to take some trades, bro. That's pretty much it. You just got to do it every day. I don't think we have that much news this week. I know we have a lot of news next week. I know on September 11th, there is a labor report, I'm pretty sure. And I think on I think the 4th or something, 4th or the 5th, something like that. There's another, I don't think CPI, but there's another meeting. There's another important news report. So the beginning of next month, the beginning of September is going to be a very busy month, right? And that means that there's going to be a lot of opportunity to make a lot of money, right? So what you need to do in between now and then, take some trades. Shout out to Christo, shout out to Jamars for posting your trades in the Cashflow app. I noticed that, and I appreciate you guys doing that, right? And Christo, what ended up happening, bro? Your trade won. You know what I mean? You hit a huge, beautiful take profit because you took action, right? If you would have been, oh man, I don't really know what I'm doing yet, or I'm a little confused still, or maybe, I don't know what I'm doing, you wouldn't have taken the trade, and you wouldn't have made any money. Right? Even if it was a demo, I'm pretty sure it was a live account, but even if it was a demo, you still won, bro. You still made progress, right? You still did something that other people aren't doing, right? So continue to do that, right? And if you aren't trading yet, I'm challenging you to take some trades. Take some trades, post them in the group chat, right? Don't be scared to be wrong, right? The only person that's not wrong is the person that's not doing shit. Okay, I'm gonna say that again, right? The only person that is never wrong is the person that's not doing anything. Okay, do not let that go over your head. Okay, when you fail or you're wrong, it means you're doing it. It means you're trying. If you're not ever wrong, it means you're not doing anything. It means you're wasting your fucking life. It means you're wasting your time. Okay, so, and I'm saying that with love because I love you guys. I want to see all of us succeed, right? I don't want to be the only millionaire out of the hundreds of students in Cashflow. Okay, if I become a millionaire, I want to have at least 10 millionaire friends with me and at least 100 six-figure earners, 100,000aires, whatever it is. Okay, so in order for all of us to get there, we got to work, man. We got to work. We got to put in the effort. We got to put in the grind. Tuesday, Wednesday, Thursday, Friday, 4 trade opportunities. I'm in a trade right now. Get in the trade or go do your own analysis and take your own trade, right? Tomorrow, take your own trade. Thursday, take your own trade. Friday, maybe, if the opportunity is there, then you take a trade on Friday. If not, it's cool. But post your trades in the chat. If you have questions, ask me in the chat. Do you know what I mean? So post your videos, post your pictures, post your trade ideas, whatever it is, man. But be active. Okay, I'm challenging you to be active, right? 99% of traders fail or lose money, not because they're a bad trader, because they're doing it wrong. You know what I mean? Don't do it wrong, right? So with that, guys, I appreciate you all. I'm going to go ahead and end it off there. I think most of the viewers are gone already. I think it's honestly just Christo and I think one other person. But hey, man, I appreciate you guys showing up tonight. I appreciate you guys being here. I don't even know how I'm going to end this stream because I don't have my, so I only have this, this screen is touchscreen, but my streaming platform is on this screen, and this screen is in touchscreen. So it's gonna be awkward. It's gonna be awkward. So the ending is gonna be a little awkward tonight, okay? But I'm done for the call for tonight. If you guys have questions, comments, or concerns, you know where to reach me in the Cashflow app. Do me a favor, shout out your boy on Instagram if you don't mind. It goes a very long way. And I appreciate it, right? You know, I'm growing this company literally by myself. I have a couple of VAs that help me do stuff, but literally it is just me. It's been just me for the last, you know, few years. And we've made a lot of progress, right? But we have a lot more progress to make. And I need all the help I can get with doing that, guys. So if you guys get value from these calls, whether you're watching this live or you're watching a recording, if you get value from these, you learn some stuff, you make some money eventually, right? Do me a favor, shout me out on social media, say Ollie Cashflow is the go-to trader. Go learn from him, right? Take a picture of me and go tag me, man. Go tag me, right? But with that, guys, I'll repost you too. I'll repost you too. But with that, I'm going to go ahead and end this off here. It's going to be a little bit awkward because I'm going to have to unplug my camera and then move stuff around. But stream's over. If you guys have questions, you know where to find me. Shout me out. And I will be back next Tuesday live to break down this trade. And yeah, guys, love you all. I appreciate you all. God bless. Stay abundant. Stay hungry. Stay motivated. And I'll see you guys at the top because the bottom is way too crowded. Peace.